Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the lab today on U.S. Election Day. It is November 5th, 2024, 10:30 a.m. Central Standard Time. Could I please get a screen and audio check in YouTube? Thank you, Lucky. How are we doing in YouTube? Oh, thanks, Fred. Okay, well, welcome everyone. Welcome to Election Day Trader Lab. We're going to be talking about the election and can the market predict an election outcome? Currently, the market is in what we consider a directional or trend configuration in an uptrend. Um, the NASDAQ is rolling right along. And while nobody can predict the outcome of the election, the ballots have not been counted yet. Election day is still going, and the polls are open in the U.S. But what might the market know? It appears that the market is potentially, and this is really what we call a guess, all right, um, a specific candidate winning the election, which would be the Republican candidate. Now, this stream is not political. The Bookmap Discord Trader Lab community, of course, it's not a political thing, and politics are really not part of trading. But what's interesting about trading is we are tracking the footprints of market behavior. And within that behavior, we might deduce something because those who are, shall we say, have better information than those of us on the retail side of the business might be projecting something. And again, this is not a recommendation. This is not even a prediction. It is a reflection of market behavior. So we'll see how that turns out. So the question is really, can the market predict the outcome of the U.S. presidential election? Interesting thought, isn't it? So we'll see how that one goes. uh, so, and I'm not saying it can, I'm saying can it or might it? So we won't know, of course, until tomorrow. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is for educational purposes only. So let's go see what's going on here. Now, as you guys know, we've been following market mechanics, and the purpose of this stream is to discuss and help you understand market mechanics. That is, how the market works, why it does what it does, and how at times you can get in alignment with it with a structured, vetted trade plan. Trade plan specific, meaning that it's about understanding market mechanics. So when does a trade show up? And how do you know when you should engage in the market? All those answers are generated outside of market hours. That's part of building out a structured trade plan that has actually a statistical probability of one thing happening over the other in a random distribution of outcomes because the market is random and anything can happen at any time. And as we know, we have no control over those external events. So what do you control? You control yourself, your own behavior, and waiting for your trades to show up. Now, you can create as many trades as you want, and they're called structured trades because if you have a statistical edge, no matter where, when, or how this edge shows up, your job is to execute the edge. It's very much a gaming. And one of the things about trading is not about predicting. It's really about statistical probabilities in a random environment, just like the casinos work. So if we use a successful business model, and I always want to kind of start with this, if we experience the market as a random environment, we're not going to put our energy into being right, even though emotionally we're attached to that. We're not going to put our energy into predicting. We will put our energy into only engaging with the other participants when we have a statistical edge of a positive outcome or a positive expectancy. Does that make sense? Think about it. So if you do that, you can release yourself as best as you can from being right. Now, emotionally, we want to be right. We need to be right. But in the business of trading, like in the business of gaming, there is no right. What is right is playing the game, if you will, using, again, a casino as a successful business model, of playing the game the way it's meant to be played with anchored inputs, not variable inputs. If the behavior of the other participants in the market is the random aspect of it, just like in the casinos, the cards coming out of the deck are random, or how gamblers play the cards is random, then the only thing that we control is our own behavior. And that means if you have a structured or vetted trade plan, only engaging when you have an edge. Does that make sense? That's the business of trading. That's what the Trader Lab is based on. And you can learn this if this is something, if you're interested in a career that's based on a business model that is successful. Trading is not a video game. It's very much process and actually a bit more. In fact, these trades are based on 60 PDFs that you can download from the Bookmap Discord Trader Lab community. There's no cost, and there is a link in the bottom of YouTube to access this. You do have to verify your Discord user, email to make sure you're not spammer. And also a library of webinars and the Trader Lab community. All these things are available at no cost in the Bookmap Discord server. So let us move right along. Now, I want to take you into prior to today's open. So let's talk a little bit about what happened recently. We had a breakout of a consolidation. This is Thursday last week. Big move out. And buy stops are here. Then Friday, the market opened lower. So in other words, we gapped internally higher. Sellers are in this leg, this big day down, trend day down. We get continuation sellers and then a squeeze of these shorts and these shorts, which takes us all the way up to this 5,800 area breakout from this consolidation up here. So we have shorts in here and buy stops. We get early sellers and buy stops, and then they light the match on the fuel. I call it fuel, and it takes us up. What do we not do? We do not get above the breakout high, even though we test it, and then we close lower. So what did that set up for yesterday? If you remember, on this day, 33 was our target, which was basically there for this day. And then for yesterday, and this is all in the stream if you're in Trader Lab, we were looking for it to take this out, which it did. So shorts yesterday, and then what happens? The market retraces, and what happens to the shorts? They get squeezed out. And what happens to the shorts in here? They get squeezed out. And where's our upside? I'm trying to remember how it actually went, but 73.25 was called a low volume node, and this is profilage, as I call it. This is an outside edge of a consolidation, and it looks like this. What's too high, what's too low, what's fair. This is shopping, and trading is very much being a good shopper. I mean, that's how the market works. It's looking for what's too high, where you run out of buyers, and that's the outside edge of a distribution. Use the term consolidation, and then the outside edge was down here, and actually there. So now we're in this. If we take out yesterday's high, then it sets up other locations of behavior. 78, and then possibly out the top and up here. And there's more, but that'll just give you a little kind of sense. So we have a potential, if we get over this high, and the shorts are here and here, buy stops, the fuel. Same concept of the buy stops here, okay? And all the shorts can get squeezed, and we can come here. So if this happens, and it's not a recommendation, of course, that's our target. So you guys make a note of that. We'll see if that happens. By the way, if you have questions, please post them. And none of these are trade recommendations. This is basically market mechanics, how the market works, why it does what it does, and what might it do, underlining the word maybe. So let's get the book map. And let's see at our early trades today. And there's something else. I posted a, where am I here? Hopefully. Here we go. One moment, guys. This is the Bookmap Discord Trader Lab community. And you can see it's very active community, a lot of interaction. And what it is, it's a team effort. That means we all work together to get better. If you're not in a community like this, I think you might be missing out. So we discuss the context, we discuss specific trades, we discuss the challenges we all face. By the way, if you face challenges, welcome to trading. It's very complex in the sense of our emotional triggers in a random environment. But we do talk about our structured trades, targeting, and everything else. So we talk higher time frames, shorter time frames, because we're all in different time frames, if you will, as you think of them. I think of them as fractals. Anyway, this community is there. You're all welcome to it. There is no cost. And there's a lot of additional education in the Bookmap Discord server. Stocks, options, crypto, order flow with a high tier tool like Bookmap, and you'll see what I do here in the stream. All kinds of good stuff. Wow, very nice. Okay, let's go. So let's look at the first trade. Now, does anybody know what's going to happen? I'm going to say no. So if we can't predict, then we have to be thinking about a couple things. So I'm going to go over a couple statistics today. I try not to do that, but there aren't a lot of trades today. So I have time to do it. So let's look at, remember, 5730 down here. I think it's 33-ish, 30-ish. Is an outside edge of this. This is up to yesterday's RTH. So RTH candles, wicks. What does that tell us? If you have a wick here, so down, okay. Rotate up, wick, too high. Rotate down, wick, too low. Back to balance. So what this is basically a compression or a consolidation. So where's my outside edge? It's out here, 33-ish. Okay, ish. No precision. And what's my outside edge up here? 72, 73-ish. Okay? This is called the naked volume point of control, 78-ish. So let's look again at the structure, and now I'm going to go into statistics. And this is important. What's important about it is this is not what most retail traders do. So I think that makes it kind of important because we don't want to do what other traders do. At least I don't. I mean, you can do whatever works for you. I found that understanding how the market works gave me an edge over traders that are just indicator-based and making it up as they go, which is fine if you're in a video game, but not so much. So here's settlement. Let's start with that. The RTH open. So we are opening inside of yesterday's range, yesterday's low, right? Yesterday's high, settlement. Higher inside of range, okay? Higher relative to the settlement. So higher inside of yesterday's range. Let's look at the statistics. The overnight high has a 69% probability. The overnight mid, got to find these, sorry, 72% probability. The previous high or low, almost 82% probability. These are called statistics. Do you think now why is a statistic or anything like this important? Does it help us in vetting and having a structured trade plan to know not what the market will do? Because write that down if you're taking notes. You can't know that. But maybe what the market might do. So if I have a 81, 82% probability. By the way, past performance, I have to say this, is not indicative of future results. You have to vet everything, anywhere, from anybody, and make sure it works for you and that it's even legitimate. Okay? Because there's a lot of, shall we say, spurious information out in the interworld, if you know what I'm saying. So we have a structure here that favors the upside. But the market can go down too. Now, what's the other little element I was talking to you about? This outside edge, the 32.33. What did we do in the ETH? We tested it. So we're above yesterday's low. I'm putting pieces together before the market even opens. The ETH low is above this level, above yesterday's low, and the stats are suggesting north of the border. Does that help you? Now, where to? Oh, yeah, part of the joy. And here's another piece. Naked volume point of control was the highest volume in yesterday's RTH. So this is the retail price. So what I have is potentially too low, too low. This is the fair price. High probability here. High probability here. RTH open. Let's look. So I have a high probability here, a high probability here, high probability here, high probability there. And this is important also, because this is the high volume in the intermediate time frame. And what is my target up above? This. So I have this, which was yesterday's high. If I come out above yesterday's high, let's go a little further. Puts this on the map. It all depends on what we clear, because nobody can predict that. Anyway, now let's get to the RTH open. Now, I did a special webinar on something called VPOC migration. VPOC migration. Yes, trading is being a good shopper. It absolutely is. So let's look at the first trades. Now, nobody knows, right? If you know, come to Trader Lab, clue the rest of us in. But what we know is structured trading in Trader Lab. And we have ways to adjust our based on the open. So we get the open, and we do know, the condition of the market, and we do know statistically this is a high probability, and this is actually high probability also. So we have this and then this. And then right here, the market can either hit this and rotate back down because of the election. I mean, I'm saying maybe, because this would be a normal behavior to come here and here. But if you get through it, it starts suggesting something else. And if you don't come back here, it suggests potential, okay? And we don't get back to settlement, we don't get to this. So if this is a shopping experience and this price might be too low and we don't come back and check it, and there is a high probability, so about 67% that we get here, and if we don't, and remember to get to the ETH mid is 72% also. So that's pretty good probability. And if you don't do something, we have something in the Trader Lab I always discuss. It's called narration, and it's conditional structure. If this, then that. If not, then what? If we open higher, which gives me a leaning to the north, and we don't come down to these probabilities, then what? Now, I don't know until I know, and that's hindsight. But let's come back now to the open. RTH open. So what am I looking for? Possibility to come down? To do anything. Welcome to trading. What do I see? Now let's look. So here's the RTH open. I get a little move down, a little jiggle, a little wiggle, and I see aggressive buying. So that's, first of all, the first thing, and I'm going, whoa. And that's kind of what I said to myself. It was, whoa. Now, I want to say something to all of you guys. I am not trading live today. It's just something I decided that I don't want to trade in potential extreme volatility, and there's 100% margin requirement, all kinds of crazy going on. So I just didn't trade today. But I'm going to show you the structured trades, because if I was trading today, these are the same trades we take, and there are traders in Trader Lab who are trading, of course. And that's, their individual decision. I did not. So I'm going to show you the trades. So we come up here, and I clear this. I'm going, wow. And this is a directional move. This is out of balanced move. In other words, we're not rotating around, which is kind of what we would anticipate. Instead, it's the bullet train. So now I'm going to show you the first trades. So once we're here, and we blew right through this, this is called VPOC migration. I'm going to label this. Now, I did a webinar specifically on this topic, and if Stephen or Dan, if you're in Trader Lab, maybe we should post a link in YouTube for our visitors so they can watch that. It's VPOC migration. This is a term I made up, and it's trading in fractals. If one of you guys can put that in the YouTube, that would be cool. Appreciate that help. So this is retail. This is a shopping experience. The market paused here, so it's a consolidation. So when the market opens, there's no volume, and then the volume starts coming in as the market auctions, and we ran away. That's saying, at the moment, this is too low. Language. So I would suspect we're not coming back here today, but, you know, anything can happen, right? So we never say we know. We say, maybe not. So that's maybe. The best you got in trading is maybe. So it's not about being right. So right here, now don't forget, this was a high probability. We blew through it. We're above a key level, 62. This is a T level. So now I'm going, all right, game on. VPOC migration. This here, right here, is a microstructure. I'm going to put a little line on here for you. And what I'm doing, so you know what I do is, when you have, this is a consolidation. And when you break above it, hold on, let me do this. Okay. This chop, chop, chop in the microstructure is a consolidation. I break high. I chop, chop, chop again. Consolidation, microstructure. Okay. So in this structure, just like in this structure, you can see the high volume. This is what a distribution or a consolidation looks like in the volume world. And in the middle of that rotation is where the interaction is of the buyers and the sellers. Think of this like shopping, retail. Buyers and sellers are doing their volume here. But what happens if the price becomes too low? In other words, you can't buy S&Ps here anymore because now the sellers aren't willing to sell you any, and they pull. So now the buyers, if they want an S&P, they got to pay up for it. Then we pause again. We get some sellers here, and we get our buyers. Who wins here? We break high. We pull back, and again, look at the volume. Here, what am I in alignment with? This. So, break high. Now this acts as support. So let's just see what it does. VPOC migration. These are fractals or micro auctions, if you will, inside of a larger developing daily time frame. This yellow line represents all the volume so far as the volume is coming in. And these little distributions are similar auctions, but they're in shorter time frames as you think of them. I don't use time, so it's a fractal. Is that making sense? And can somebody please post that link in YouTube? On VPOC migration. If I need to go get it, the stream's gonna get messed up. So let's look at our structure. If this is shopping, this might be too low. Why? In the store, for the S&P shopping experience, it was too low. If you can't buy S&Ps here, and we come back to the price, it might support the price because this might be, and I'm always going to say might because that's the best you have, maybe, too low. If I pull out here, this is my support. See? Now, there's no precision in trading. It's part of the joy. So what do we have here? Support. Now, this is called, in a fractal, mean reversion. It's outside in. This is the mean. This is the current retail price. And it's called VPOC migration. If I pull back to it, it is along in the Trader Lab. Your stop would be under here. or you get long against here if you're a little more advanced and you can, but when you're operating, and here's the other piece, I'm going to put a couple pieces together. We're above the ETH high, and we're above this, the highest volume in the current Ford. Let me show it to you so you see these things. This is the 62. Remember what we were doing in here? This is before today's RTH open. This was resistance. This is the fair price. If I get over the fair price and hold it, that puts this, and that's yesterday's high, buy stops, this, naked volume point of control, this, that. And, and I say, because what I'm saying is, we don't know. But that's the structure. So you trade structure if you're in trade lab. And then you take your stops when it happens and you put your trades on, the ones you vetted. So this is too low. So if I put a trade on, this is where it would fail. So I can put it against here. And when I come across, and here's what I'm pointing out. I'm above this. In an intermediate time frame, this is the retail price. So now I'm talking fractals. Higher time frame, retail. I'm above it. Maybe it's too low. In the microstructure, too low, right there. And in the developing daily time frame, maybe too low. You see how all these pieces are coming together? Does that make sense? Variable high volume node, I move higher. So long, maybe long, subject to your plan. It's called mean reversion. And the key to this is right there. That's why it's okay for a long. VPOC migration. What does that say? Too low. You want to buy an S&P? Get your checkbook out. And remember, this is the market suggesting an outcome, potentially, for the U.S. election. Wouldn't it be interesting? Let's watch. Where do we come? And what does this say? Let's go to fractals. Too low. Too low. Retail. What's this? Too low. And what's this? Yesterday's high, and this is resistance right there. Where does it come from? Back to the higher time frame. There. Resistance. Yesterday's high. Now the question becomes here. Do we just take the stops and mean revert? I discussed this in Trader Lab. It's possible to run out of gas, come back here, and rotate. Or, and the or is, get through here, go there, and then we have a couple other little targets here. We got this, and then we got that, and then we got this. So again, putting it all the pieces together. This is what a trade plan is, guys. It's not the holy grail. It's not prediction. Do you see this behavior here? How we rotated outside? What is this here? Isn't it the same? Except now we know what might be underlying too low. Do you see this? Do you see this? Do you see this? Do you see this? What is this? Ask myself the same thing. What it is language. I don't use indicators. And the reason I say that is, what is my indicator going to tell me? Is it going to tell me to sell this, to sell this? Is it going to tell me to sell this? Is it going to tell me to sell this? Am I going to get short, or am I going to only be looking for longs? If I do sell this for trade management, which you could be getting long again here. Or you're looking at the condition of the market being above this, and you know there's shorts in the market and that there's fuel here and above. And if I clear this, what is my next target? Here, let me get this off here, that, and if I clear that, I've got this, and we'll go from there. But I'm showing you process. It's a narrative, and it's how you might get an alignment. Let's watch. What do we do? I'm not paying that. I'm sorry. I can't buy it here. It's too low. So too low, too low, too low, VPOC migration. See if you see something familiar. What's this? Let's just see. I don't know. And by the way, it's all random. It doesn't have to do anything. But if you can speak market, maybe there's a language involved here. I break high. So let's look. So I came down here, VPOC migration. I pull out here. Now, I didn't get it here this time, but why can't you buy it here? Because you're sold out at this store and the buyers are eating up the sellers, the passive side. This is Pac-Man. They are consuming. Right here, I have a micro consolidation. I'm just going to put a little line in here. And this is my next target. Another target is here, high volume. Let's just keep going. Now, this is the first hour's high. Let me give you a statistic for this. And I hope you're getting something out of this. Please give a thumb up in YouTube. Now, the fact I don't use indicators doesn't mean you can't use them, of course. By the way, there is a almost 98% probability we take out either the first hour's high or low, and it's called the IB, or initial balance. That's this. I don't know about you. Which way would you think? We're going to take out the first hour's low or the first hour's high? Me, this. So this statistic is open. And so you know, this statistic comes into play at 9:30 Central Time. So it's not in play yet. Currently, this is the high of the day. So it hasn't happened yet. But I want you to know that if I'm sitting here and I see this is a directional or trending configuration, pedal to the metal, I only want longs. And if I know at 9:30 that this has over 90% probability, do you think I'm going to get short, or I'm only going to be using counter rotations, even if I get taken out, to get long? For me, long. And now I'm above this. The last time we were up here, this was too high. Remember, shopping in all time frames and fractals, and I'm over yesterday's high. And I'm over this low volume node that I showed you in the bigger chart there, the higher time frame chart. So if we're outside of this, it sets up higher, multiple time frames. Don't want to make you crazy. Come to Trader Lab, bring your crazy, and then maybe you can find a little sanity in a random environment. So what does this tell me? So, and I'm going for this, right, at 9:30. Here's 9:30. This is the current high. I'm looking for it to get taken out, okay? Now, right here, I pull outside again. However, I don't have anything here. I don't have one of these, which I'm going to mark, by the way, just in case. So out here, I'm going to show you something a little more micro, and it's not a recommendation. When we rotate it out here in thin air, it's like, what's going on? I don't know. The volume is actually, let me just bring us back to the way it looked at the time. The volume is here. So this is a retail price in a fractal. So let's just chop, 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 chop. What is that? Consolidation. Same thing. What is this over here? Chop, 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 chop. What is that? Consolidation. Where's the high volume? Here. Now, I'm going into more advanced concepts, but what I'm doing is generic. It's only fractal, or as you guys think, time frame. So the chop, chop here was too low. I ran, and then I paused here. I consolidated, creates the volume here. This is the outside edge of the consolidation. It's right here, and I'm just going to put a little box around it just so you can identify it. So what I do is I'm using the auction. I'm not interested in an indicator that tells me I should get short here or whatever, because it's not broke, is it? And I have this statistic potentially going to come up at 9:30. So this is where the market is. And up here, I also have another consolidation. So let's just see. High volume is here. High volume is there. So support, and we don't know what's going on with this, but except the volume is there. Come down. My support is here. Outside edge of the consolidation is here. come out, come back above. This is now resistance. Let's just watch it. VPOC migration. Notice what happens here. Support. So break low. This is your support. Break low. Bounce, pull back, potential long, VPOC migration to there. And then you're still going for this. Now, this is, again, advanced. And you don't need to be doing any of this, by the way. I'm just saying. Let's look at it closer. Where's our support? Isn't it here? Isn't it there? Isn't the high? Let's look at the high volume. Let's come back. It's now there, because right there. And the reason it's moved is because now we have this volume in here. Now this is support. Let's just move it along. So you have this to this, to there, back to here. Didn't get there. That's fine. You're long. And where's our statistic? It's going to be here at 9:30. Where does it pull back? Here. Long. To where? To there. Out the top. All this is trading in fractals. Out the top. Statistic, right? You're taking note, I hope. Now what? Let's look. So this is a target. Now we have a couple trades here. We have something called the IB. Now there's no shorts for me in this configuration. So I don't have a short. So right here, now this is a trade plan specific. Right here, you have choices. You can just sit with this thing. And subject to how you manage your trade, you'll get taken out. Or you'll come back inside. And we have a trade, and there's two trades here. One is called the IB continuation trade, which is break high, pull back. So it has to break first, which is what happens here. And also, I got to point out, when we come up to this, that's a target or a scale. Then you're holding runners, or if you're out of runners, you're looking to add back on a retracement back to here. That would be a long, okay? So we would be looking here, the high volume right here for a long. Let's put the line in here. So break, pull back. So right here, it breaks. This is your trigger for the IB continuation trade. Where is support? It's here. So break, which is a target, right here, pull back. So here's the possibilities. A long here or an add. Again, subject to your trade plan, not mine, yours. You would get a scale or not, subject to, it's just how you manage your plan. And then here, microstructure is right here. Now, interesting, watch. Now this is not a reason to get out of the trade unless it's in your plan. For me, the trade has a problem under here. So subject to your entry, it's a lot of range when you think about it. If you're getting in here, let's just say you get in 94, you've got, 4 points, almost 5 points. You'd be risk neutral. Your stop would come under here, or you'd be under here. You get taken out of everything. That's that, okay. Trade toast. Now what? Now, before I go on, I'm going to come up for air. Do you guys have questions? And did somebody post that link in YouTube? I can't tell. Oh, okay. Did that get put into YouTube, the VPOC migration? I'll copy it over, guys. Thanks. Thanks, Doe. Appreciate you doing that for me. Appreciate the help, Trader Lab. Here, guys. What you're seeing is something called VPOC migration. I did a specific webinar. There's the link for it. You're all welcome to it. Plus, you're all welcome to visit the Bookmap Discord Trader Lab community. There's a whole library of these things. And a 60 PDFs of these trades that you can download, and of course the Trader Lab community, which is a serious community for serious traders. It's not romper room. It's really about the business. So this is support. This is called mean reversion. And we always like that, we joke about it a bit because it's mean. The hard part about this, getting this, is that where's the outside edge? Nobody knows where the outside edge is. That's part of the joy. So if you get long here, which is support, right? Then this is where you're trying to go, here. Do you have enough range? You do, if you can execute properly. And why would we execute here? Let's come back. Because the last time we were here, it was too low. Now, there's two things to know about this. There's going to be stops under the swing, so that's part of it. So anytime you're going to put a trade on, you got to look left, because what the market will tend to do is take these swings out, but you don't know. This is part of the joy of randomness. So we know there was sellers here, right? Red delta bubble, aggressors, sell stops, and right there to stops, and there was icebergs buying into the stops. Now, the way the market tends to operate is it can come back to a location, but we also know retail traders who are trailing are going to have their stops here and under here, wherever they do it, right? And they tend to do the same behavior. I do too. So do you. At times, that's what you got to do. But if you're going to put a position on, you got to look left and see where's a swing, because the market could come down into this, take it out. But now here's the but. Why did the market go up here? Because there's a passive side. There's the aggressors and the passive side. And in order flow, if you understand order flow, you're going to know that there's no wall. It's an area. So if this is a swing and I come down here and I take the stops under this swing, the buyers that were here might get activated again, but not exactly here. They might take the stops out. And then if these buyers who are aggressive over here think this is a heck of a deal or even a little lower, they're going to activate again and we're going to come back. Just make a note of that or think about it. I come under here. Now, if you're trailing under here, you'd be out. Life in the fast lane. Just pick yourself up. So there's our stops coming out. And where are those stops coming from? This swing, in my opinion. And I'm out at a location. You get taken out, weeping and gnashing of teeth. Now what? See what happens? Right here, why did the market go down? Those stops. No way to know. Why didn't it hold this? No way to know. If you got long here, you'd scale here, your stop would be under here. You'd get taken out. You'd scratch if you're in the Trader Lab and you have a plan in this range and a trigger. All these things are part of it. Or you just take a stop like the rest of us, Get your Pepto-Bismol out and your Alka-Seltzer. This comes out. There's my aggressors. Aggressors are sell stops and new shorts. VWAP is here. What do I get? Watch. Microstructure is right here. Micro volume. It's all in alignment. So here's resistance. Pull back against this. Break high. That's a Trader Lab trigger. Here's the test. Here's the long back to here. Mean reversion. It's the same trade as this. Mean reversion. Except we got the stops and now it sets up the same trade in alignment with the trend. Up. Watch. Now we take this out. Same trade. So from here, you're going to there and you're coming back here. Depending on the number of bullets, you could be flat or you're trailing. Watch. Support now is here. Let's see what it does. Where do we come back? Here. So you come back here, you pull back, potential long against this structure. New high, pull back. Support is here. Oh, where am I? Oh, there we are. And where's my target? Hopefully it's on here. Yeah, there it is. Not a recommendation. Questions. This is Trader Lab. Now, I'm not saying anybody should do this, right? It's not my job to recommend anything. We all take stops. That's cost of production and overhead. If you're in Trader Lab, you'd understand this. I'm not saying you can do it. I'm saying you would be able to develop an understanding of market mechanics. We cannot predict anything. But these are structured trades in the Trader Lab. This is the IB continuation trade. This is the IB continuation trade. These are both the same trade here. Long, long. This, clueless. Long, back to there. Break high, long against this and that up here. Pull back to what? Support. Where's the support? Here. What is it? Long. And then, not a recommendation. This is our target. And 4-Lot Tony in the Trader Lab posted this. Tony, I don't remember where it was. Let me see if I can find it. Well, this is what his trade was. Tony, when did you post that? I want to just have traders see this. Tony, if you're in there, let me know. Wouldn't higher be probable? Here it is. Do we get to 5,800 and then 5,820 outside edge? This is 4-Lot Tony. He's calling out the target in the higher time frame. Now, some of us would not trade that to that level. But why would Tony do it? His trade plan, he's trading in a higher time frame. Other traders are going to be trading in this or using a multiple structure of developing time frame long here and extrapolating it out to there. That's our target, by the way. So where'd you do that, Tony? I think Tony might have left the building. Let me see. It was quite early. Anyway, I guess I don't think I can find Tony in here. Notice here's an interesting thing. You can go broke trying to pick the top. Counter rotations look like potential reversals. It is easy to get trapped there. Remember, picking the high a day is not a smart play. Let someone else be the hero. Right? At the moment, trend up and squeeze. You need to be waiting for your trade. If no trade, then be a tourist. Come on, Tony. I can't find it, but anyway, Tony. So you can see we're squeezing, and be aware always where the fuel is and where is the fuel. In addition, in this business, we follow the current context and also stay ahead. So we know what we're going to do before we are going to do it. Doesn't mean we can predict. So anyway, this is all what's happening in Trader Lab. And if you were in Trader Lab, you would know this. Now, it doesn't mean we would predict it. What it means is you would understand market mechanics, how it works, and then it's always maybe. Maybe it'll do this, maybe it'll do that, then maybe not. Anyway, wanted to bring that up. Can't find it, but that was Tony. Nice call, Tony. And by the way, the nice call means it's maybe. So what we're doing in Trader Lab is we are narrating the market. We are attempting to stay in alignment, which means no shorts. We are also using structured trading, market mechanics, using the auction with structured vetted trade plan to stay in alignment. So based on the market's behavior, what does it say about the outcome of today's presidential election in the U.S.? It's a guess. But does the market know something we don't? We're going to find out, of course, after the votes are counted. But the way I interpret it, and I'm not saying this is anything more than a guess because that's the best you got, is that there's going to be a Republican victory. And no matter which way you vote or what your political belief is, let's just hope that that whatever your wishes are for the outcome, that they're fulfilled. Because I'm not political. I mean, we all have our. If you vote in the U.S., you vote for the candidate you want, but the market seems to be suggesting something. Won't it be interesting to see what the actual outcome is? I find that interesting. So, what does the market know? Maybe nothing. Maybe it's just a short squeeze. But it seems to me that it's a bit more than that at the moment, since it's a trend configuration. Are you guys tracking? Oh, Dr. VWAP? Really? Well, congratulations. Thank you. Dr. VWAP's on YouTube. Well, thanks for the kudos. Appreciate it. He says he's been a silent lurker for a while. How long has that been? This information and Bookmap have taken me from a negative trader to break even. Congratulations. Let's keep moving it forward. Come to Trader Lab. If you're not in Trader Lab, I believe anybody can learn to trade if they do the work. The other part about this is that it's gaming. So if it's like the casinos, each game is independent of the other. They all stand on their own. They all have a statistical edge, and the outcome is random. If we only interact when we have a statistical edge or a probability that favors us over time, notwithstanding the outcome of any individual interaction, we will extract the dollars from the gamblers. That's really what this business is. So on the structured trade world, this being along is a structured trade in alignment with the configuration. Breaking here and pulling back to this is called the IB continuation trade. That is a structured trade. Breaking here, pulling back to there and there, which is your support, is an add or is just a long if you didn't take this one. All these are structured trades. And this is the target. And there's no way to know if we'll ever get there. Not the point. And we can go higher, but this is my primary target. And it's an area. Again, they're not predictions. They are market-generated information. And that's what auction market theory is about. How does the market work? Why does it, do what it does? And then how, and this is what Trader Lab is, the how, can you get in alignment with this with an understanding that the market is not an indicator business. Here's the thing about indicators. Most of us, when we start at some point in this business, think it's all about indicators and software, what I mean, curve fitting and time frames, right? That's a normal thing. We all do it at some point in some way. Over time, what happens is you figure out that the indicator is an output of some derivative of price, but it only is one piece of a picture. It cannot guide you typically in a consistent fashion as far as adjusting what you do to the condition of the market. Because you may have an indicator saying the trend is up, but you're going to have under indicators saying get short or exit or do something when there's no reason. Does your indicator help you get long right here or right there? I don't think so, because they're lagging and they're conflicted. Now, if you understood context, which is what this is about, in other words, trend, which means no shorts, the only short you would take is an exit, but not a fade in this condition. What you're looking to do so far in this condition is only get long or add. If you understood structured trading, you could be position long here. You could be adding and scaling, I should say, here. You could be adding back here, scaling out and holding and adding. All that's more advanced. But in Trader Lab, you would learn this. It's one piece at a time. You don't come to Trader Lab and spend 2 months and now you have an ATM in the basement. Let's be realistic. It doesn't work that way. This is an advanced degree in trading, is the way I think of it. This is not romper room, and it's you can start with the fundamentals. And the fundamentals are understanding market mechanics. And you're going to have to invest time. If you want to be a competitor in anything, whether it's a sport, you want to get an advanced degree in business or physics or science, anything where you could be at the top of the game, and you got to be at the top of the game in this business because you're competing against other traders, who are very skilled and most who are not. So the thing about it is you can learn from your experience or you can keep repeating it. And most of us keep repeating what we do because everything works at times. That's the gotcha statement in this, because the market is random. So if you threw a dart at the wall and it hits the wall, you buy, and you're going to have winning trades. I did a webinar on that, and I called it Trader Groundhog Day because I experienced, and I made up the term because it was me. Everything I talk about is based on my experience because I think it's very typical. Except I've been doing this for 45 years. That's not typical. But what I did along the way is probably typical. And when I started out, I didn't have the internet, and we didn't even have PCs. So it was a different planet, So no domes, none of that stuff, no level 2. So it was a whole different experience, right? So as things developed in the technical world, I would embrace them and work on them and see them work at times. So then I thought, make it better. And that's what most of you guys are going to do because you have random success. I mean, there's days like today, you could be using anything almost, and you'd probably have a winning day, a successful day if you can handle yourself, But on most days, this is an outlier day. Trend days are not, maybe are 25 or 20-ish%, whatever it is, of the norm. Otherwise, it's directional, and then it gets rotational or reverses, whatever it does. Those are the days where you base your life on this kind of configuration when this is not. This is more of an outlier configuration. But in Trader Lab, we understand that. And when we're in a condition like this, we just keep operating it until it changes. And again, change happens in hindsight, not in foresight. So that's why when we take a trade, we're basing it on the current condition of the market. And as long as the current condition is up, it's longs only. And it's structured trades that get us long or give us ads right here, you see, and then here. And it may never get there, by the way, right? So it's not our job. Our job is the following. Take the trades that have a statistical edge, be in alignment with the current condition of the market, be willing to take a stop because that's overhead and cost of production. Casinos do okay paying the gamblers and giving you the cocktails and the ticket to the buffet. And if you're a big roller, comping your hotel, flying you in and sending the limo. They still do okay using that process. That's the process we use in Trader Lab, gaming. Then each individual game has to be in alignment with the context, and you only interact when your game, if you will, or structured trade shows up, and that has a statistical edge that you've vetted. Now you step up, you put the trade on, you put your helmet on, you take your stop, or you manage your trade, you get risk neutral, which is job number 1, minimum 2-lot configuration for developing traders in Trader Lab. Come to Trader Lab, I'll explain it to you, and everybody else will, and how it works, how it gives you the courage that if you get risk neutral, and we all take stops anyway, you get risk neutral, now you're not going to be controlled by your emotional state. You're going to have better control over your fear. If you can control your fear, because the worst that happens is you scratch the trade, it allows you to manage the trade. And when you see a counter rotation, you don't jump out the window because of your fear, emotional stimulus. That's all part of what we as humans have to manage. And when you're in a random environment, your fear is continually triggered. If you're risk neutral, and even though you're going to be emotionally attached to the outcome and you scratch the trade, is that better than bailing out and then the market goes here, which it may or may never do? Does that make sense? Guys, please give a thumb up in YouTube if you're getting something out of this. Trader Lab, if you have questions, please post them. Same in YouTube. Remember, none of these are trade recommendations. This is based on structured trades that are available to all of you in the Bookmap Discord Trader Lab community. Here they are. And when I put these together is because I was posting, typing, please. And why? Why does this happen? And I started doing this, and I did a lot of them, and they're a mix of different things. I'm not a vendor. Order flow, different phenomena, things that I've learned over my experience, and especially trading the auction. So I don't use the indicators. Now I did work, so you see this stuff down here with Bookmap developers early on, and they were making up things for me, developing things that I thought might be useful for developing retail traders. So you're going to see stuff here that it's not material to what I do, but I was doing this for them and posting it. So some of this stuff is not what I do, at least indicator wise, but a lot of this is so the auction for me is the primary chassis. And I did a primer webinar. It has over 30,000 views. You're all welcome to it if you haven't seen it. It's in the Bookmap Discord Trader Lab community, and you're all welcome to go take a look at that. Remember, not a recommendation. And that'll give you an overview of this, kind of a high-level overview, and it's why anchored inputs. Why not randomness? If the market is random, something needs to be anchored. They don't make the games up in the casino. They don't change the games based on the outcome of the last hand. So, and I always like to use the example at the blackjack table, 7 cards, and if a gambler walks out with a suitcase of cash, they don't make it 5 cards or 10 cards on the next hand. They don't change anything. The only way they extract their edge is by playing it exactly the same way. That's what business of trading is. It's the exact same thing in a random environment. That's why if you're long from this is the last long here. This is long. So this is long. This is long. This is long. By this is long, I mean this is the structure. There's the pullback. See the line? Long. Here's a pullback. You're against here. Could be a long. Break here. Pull back here. This is a potential long here. Or here, I should say, not this one. Here, because it's aligned with this. All these are longs in Trader Lab. They're all structured trades. If you had vetted these, you'd just be hanging out long. And you'd be adding and scaling and rocking and rolling. Or you'd just be long from down here. You'd have your helmet on and you'd be in your Barca lounger. All of it's up to you. And it's all Trader Lab structured trade. And I believe anybody can learn to trade. It's just personal belief. And doesn't mean you will or can. And I think if you do the work, and here's the thing about Trader Lab, you got to do the work. Nobody can hand you an ATM, right? How do you get to a place where you can create a career path? You can do that in Trader Lab. And again, it doesn't mean you're going to be successful. Nobody can do that. A lot of traders will not be successful. It doesn't matter what, because they don't do the work. They're looking for easy and shortcuts. They don't understand FOMO. FOMO is jumping from mentor to mentor, coach to coach, the Holy Grail to the Holy Grail, the only one thing you need, going out on the internet and just hopping because you don't stop to do the work and also vet the individual that you're hanging out with. You need to know, who is this person? And then you got to also go to community and see what's there. Is it real or is it nonsense? Snake oil's been around since they invented snakes. So, and we all have desires for success. And I know myself, when I started out in 1980, I would have paid anything to be successful. In fact, I did. Back then, we didn't have an internet. So a book on trading could cost you $100. You know what $100 was worth in 1980? Oh, $100. What is $100 worth today? $40? $60? I don't know. Not much. That's a lot of money. for a book and then go to a seminar. I went to seminars. Get out a plane, stay at a hotel, pay some bozo a couple $1,000s because they had an ad in Futures magazine. It was called Commodities magazine. Now it's Futures. But back then, that was the kind of the thing, you know. Yeah, I did that. Because just like you, I'd do anything. You want to do it. You want to do it. And somebody throws a lure out there, puts a great ad together, shows you a little behavior or structure, and you can learn that. We all run. And it was, I won't use the name, but it was fractals. And a fractal was a new concept because everybody was time frame oriented. What's a fractal? And chaos theory, that was another one. Have you heard of that? That was new. You know, operating in chaos. They're talking about randomness. But chaos theory and fractals. Here's my check. Let's go. Have you done that? Well, if you're in the internet now, you know, out here in this space, it's all the same. It's just your access is, you know, it's much greater. So, you know, but nothing has changed as far as, the, you know, the snake oil salespeople and also our need, our FOMO, and our drive emotionally for success. That's the same. So how do you manage? What do you do about all that? Well, you got to find a community you can relate to, and then you got to roll your sleeves up and settle in for education and going through a learning curve that you're not going to enjoy. I'm going to tell you, you're not going to enjoy it because it's not easy, and it's very hard to let go of your compulsion to impulse in and, quote, play the game because you can't stop. That is a problem. And you need to recognize when you're not in control of yourself. Part of developing a trade plan is to develop self-control and discipline. If you knew how to trade and you learned to trade and you can't control yourself because of the stimulus, the dopamine, and all the other psychological and hormonal elements that are taking place that you haven't taken the time to understand, you will not be in this business because we've all had to deal with that. Now, I'm not bringing all this up to dissuade you. I'm trying to help you understand the challenge and that you need to be in a community, wherever it is, doesn't have to be Trader Lab, that understands these components to the business and can help support you when you run into problems with yourself. Because, and I suggested developing traders stop trading. And they go, I can't, I know, and they want the action. What is that? Compulsion, emotional stimulus, dopamine fix. It's a problem. It'll take you out of the business. What would it take for you to stop trading and isolate one trade and become expert at it, a structured trade, and now you have a metric? And so instead of you being controlled by your fight and flight, you know, your fear and your FOMO, you're controlled by a tangible metric that says you have a statistical edge. Now you develop the patience to wait for the trade to show up. When it shows up, you know that if you put this trade on right here at the IB high, the IB continuation trade, that you have X% positive expectancy of getting risk neutral in this context. And then you have a trade management process that you've vetted that says the worst that can happen is you will scratch the trade. And if we have a target, you're managing your trade towards a target using a process that you have vetted. And any time at any moment, it could come down and take you out. What would you do then? You either have another way in or your trade is over. Can you do that? Does having a metric, which is tangible, give you control over the intangible aspect of randomness? Does this make sense? You see, that's why the Trader Lab exists, because most traders never are in the business long enough to understand what they're really fighting against. It's truly themselves, because anybody can learn this, I believe. I believe anyone who comes to Trader Lab can learn how to trade. But many traders will never learn how to trade because they can't control themselves and consider this a business. They treat it like gambling in a video game. And the gamblers are always welcome at the table. But the house always extracts the dollars in a random environment from the gamblers. This is what the Trader Lab is based on, the business of gaming. Does that make sense? Please give a thumb up in YouTube. And if you're in Trader Lab, do you have questions? And how are we doing in YouTube? Please give a thumb up in YouTube. And by the way, give a like. And remember, this is our election stream. And the market is suggesting an outcome for I believe, a Republican candidate. Now, if that's not who you're, shall we say, cheering for, please accept my apologies. But it seems that's what it's saying. And I put it this, and I'm not rooting for anybody here. Call me neutral. I'm just reading the market, and the market speaks. So that's what I'm seeing. So wouldn't it be interesting? So we'll know tomorrow on that one. But the question is, can the market predict a presidential election? One of the platforms favors less regulation, right? Not taxing the wealthy. Another platform kind of takes a different approach. Why is the market doing this? Isn't that interesting? So we'll see. I've been involved in the market going on 45 years. And I told myself today I wasn't going to trade. Now I'm looking at them going, maybe you might have. But it's just one day. I don't think that much about it. I'm much more interested in the behavior of the market and seeing the trades work for the Trader Lab traders who are trading. And I made a decision not to trade yesterday. So I make that decision, and that's my decision. But this is very straightforward trading as far as structured trades in Trader Lab. So you're trading at Trader Lab. I'm hoping you're having a good day. And remember where we're looking here. And it doesn't mean, by the way, let's come back to our higher time frame. This is where that level is, out here. So remember what the condition of the market is. Stops are here. Stops are here. You clear, once you're over 58.07, you are in, this is the next thing you got. There's really nothing here. You see? So this is how the auction helps us. So we got our target, which was under here for yesterday. Then the shorts got squeezed. The high of the day was here. This was made in the morning, right? Right there was our resistance. This is the same as that, except this is a higher time frame. This is an intermediate time frame, and this is a daily time frame. So you go down in fractal. Intermediate time frame. We're above this. We're above the high volume. So in this fractal, this is your world. Once you're above this, you're going for that. Then you're going for this. You're going for this. And now we're out the top. This is the next target. So but this is the structure. So all those levels you're seeing that I have labeled on my book map are coming from the auction. And then, of course, we don't know what it'll do. But these are the targets. Once you're above here, and you're above those stops at 05, 08, this is all you got. And again, not a recommendation because the market never has to go there. The market may find its sellers someplace before there. And then we may never get there, or we get there tomorrow, or whatever happens. And, because we have the election, things could get kind of funky, and we have other targets up here. So anything can happen. So what these are distributions. So what is a distribution? It's an auction. Too high, too low. And where's my support? Let's go back to microstructure. I'm going to bring you back. Let's do this so we don't know what's above us. Break low. Support is here. This is your high volume. If I come out now, and this is along here, right? High volume is here, support is here, and support is here. There's your support, high volume. Let's look over here. Let's follow the yellow brick road. Let's just go piece by piece. High volume, break low. That says downside rotation. This is support. Support, resistance. Watch. Break high. Volume is now there and here. Resistance, support, support, support. So resistance, break high, support, up. Let's get to the next one. Where's support? It's here. Where's our resistance? Let's put a little line up here. Where's my indicator? I don't know. Left at home. Now, this and a break, your support is here. Too high, support, break, resistance, break high, pull back, support. Now what? Break high. What's this? Support. What's this? Resistance, break low. Oh, end of the world. Where's support? Here. Where do you trail your stop? Here. Too low. Aggressive buyers. Buyers. Too low. Buyers. Where's my volume? It's here. What is it suggesting? Can you see it? Does it make sense? Willers, am I manually adding? Are you talking in a Bookmap over here? Willers? So Willers, if let me know if that's what you're asking me. If you, I add these manually off the higher time frame chart. These are automated. They're coming off of my Investor RT Cloud Notes, and I also add these manually, of course, with the drawing tool, which I have set up with a Stream Deck, which so I can just push a button and put them on, wherever I click. So that made it a lot easier because I wanted to be able to draw this for you guys. Too high, too low, too high, too low, break high. Outside edge of consolidation, high volume is sitting here. It can accelerate from here. It could also pull back into here. Let's see what it does. So this is trading in fractals. What I can do, and you can do, is you can slice this down into microstructure, like there, shows me the counter rotation. Here, I'm against this, shows me the counter rotation. That makes sense. And the other part of this is, see the behavior? So if you're trading a larger rotation because you're more position oriented, you'd pull the microscope out. If you're using a tweezer for execution in the electron microscope, you could be leaning against this. Resistance, pullback, micro, right here is support in the order flow, right there. So if I understand what this is, high volume, and now I'm going to take you into something more advanced, and I know this is an outside edge, and I know this is resistance, and I'm consolidating. Now let's go into something else. What is this? Chop, 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 chop. Isn't that the same as this? Except now if this is too low and this is retail, this is how Bookmap can help you. What happened here? Look to the right. Micro, high volume. I'm going down in time frame. You guys think of time. You know me. I don't think of time. And resistance is this one up here, there. So I'm boxing this in with something a lot smaller. I know there's a lot of lines, but let's look at why this works the same way. That's too high. There's resistance. Here is support. There's resistance. It's this. Now I'm in a microstructure. I come down here. If the trend is up and this is support and this is my outside edge here of this thing, of the consolidation, and this is called the low volume node. I'm getting into something a little more advanced here because there's much more to it than I can, but all I'm doing is showing you structure, and I'm doing it in multiple time frames. Think of Russian dolls. They're inside each other, fractals. So this is support in a fractal. This is resistance. You see the resistance. If I come down to support and my outside edge of the distribution is out here, and I find my buyers against, and by the way, why did we go up here? That's absorption. Right here, the passive buyers are active. These sellers right here got absorbed right there. And there's the iceberg, okay? Buyers. Now, what's over here? Let's just take it from the other side. Exhaustion, buyers. And what's over here? Sellers. There's your sellers. There's your volume. Does it break high or low, Tom? Breaks low. What's it do here? It breaks high. I can get long here to here, or comes down here. What do I know about here? Buyers were here. That's why the market went up. What happens if we come back? Oh, really? I can buy it on sale? Boom. Against here, don't know. See the buyer, break high, support, break high, microstructure right there. Now this is advanced. Outside edge, micro consolidation right here against that. Okay, you see how this works? Resistance, support, waiting, trigger. The high volume is right in here, potential long, and then you've got up. And look where we are, the outside of the consolidation, new high. You see how all this is fitting together? What do they used to call those blocks? Lincoln Logs or something? Remember that? Now it's Legos. And where are we trying to go? Maybe there. Final questions, guys. I got about 8 minutes. And in the meantime, I want to invite you all to the Bookmap Discord Trader Lab community. There's no cost. Willers, you never answered my question, so I guess I answered it for you, if what you were asking me. There's also the Trader Lab community. There's no cost. You can click the link in the bottom of YouTube. Also, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, circle arrow. How do you build out the business of trading? How about this? Roll up your sleeves and do the work. Nobody can hand it to you. You actually got to do it. Do you want to become a top competitor do you want to develop to an expert level? Not a predictive level. That doesn't exist. But to really understand how the market works, why it does what it does, and how you can get in alignment, and then only interact when you have a statistical edge, like the casino. They don't make games up. They don't impulse. They don't get depressed when when somebody walks out with the cash. They're not attached to the outcome. Now, we are attached, but if you understand statistics, you get attached to your statistics, not to the last trade. If you understand how the market works, you will understand why this is the target. And you'll also understand maybe what the language is and what it says about the outcome of the U.S. election. And that's a guess. not a prediction, right? Isn't that interesting? Hope you're getting some out of this, guys. By the way, leave a comment if you want. So we'll see what happens. And remember, it's not a prediction. It is a function of behavior. So we'll see. Because the question becomes, can the market predict, the market, not me, the market predict the outcome of a presidential election? So you'll all be watching, I'm sure, even those of you around the world who are not in the US. And let's see if the market actually is suggesting something. I always find these things very curious, right? So I'm curious. That's why I posed the question. Certainly don't have the answer. Any final questions, guys? And remember, if you're interested in the Bookmap Discord Trader Lab community, you have an open invitation. 5724. Yesterday's market can close that by one tick. Bailing, I'm not sure what you're asking. Well, right now I'm considering this the outside edge, Bailing, for as a long target, which is that's only because of structure. We have, I believe, cleaned out the stops in the higher time frame here, and 5807. So we've gotten above this where there's buy stops. So we've cleaned out the shorts. So that means we can fall back inside or continue up to here. And it's not for me to say. So, but the fact that we came up to the other side does, does suggest, if depends. Again, if we fall all the way back down, we can come all the way back inside here. So I can't predict anything. Well, what does it say for the future? I think I can't get that far ahead. Right now, this is a key piece. So if we only come out here and then we end up tomorrow or whenever coming back in here, then it puts this back then out the bottom. If we get through here, then it's putting us back here to 5878, which would be something, wouldn't it? Or maybe, not necessarily all the way up there, but that's the main balance. In this consolidation, this is the fair price. If we leave it, then this would be our resistance in the higher time frame. If we come up here, we can fall back down here, or we can push through and go here. That's what I know. So I don't know if that answers your question, but that's as far as I can go for the moment, because I only know what it might do. I certainly have no idea what it will do, and it's in fact not my job because I can't know. So anyway, I hope that answers your question. Any last questions in YouTube? Please post them. I've got just 2 minutes. Please give a thumb up or like on the way out. Hope you got something from today. I wish you all the best, and I hope if you're in the U.S. and you're voting that your candidate wins for you, whoever that might be. Let's see how it all turns out. Please give that thumb up. And remember, this stream's available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, work on your business. And also, if you're interested, come down to the did Discord get cut? I guess it did, huh? 30 seconds until come to Trader Lab, guys. Use the link on the bottom. There is no cost. and you can take advantage of all the additional education that Bookmap offers. Thanks for visiting the Trader Lab today. Please give a thumb up in YouTube on the way out. Thanks for visiting. Look forward to seeing you guys next time, and I look forward to seeing you again in a few minutes back in the Trader Lab. Take care, guys, and thanks for visiting the Trader Lab today.